Technical analysis with the ascending triangle chart pattern. Here's a case where the pattern forms almost immediately after a bullish reversal, really accelerating the progression of the uptrend and marking a major long-term range of support from 71 to 72, which won't be recontacted anytime soon with the completion of another ascending triangle. In addition to the main incline of the triangle, there's a steeper short-term uptrend line just as it begins to complete. All these uptrend lines have some influence, but overall aren't that useful in this case, in terms of providing references for support, which of course is done much better by the 76 to 77 range from the resistance area of the ascending triangle. After eventually dropping below this firm support range, it reverses rolls to become clear resistance, which pushes the chart back down to where even the first range in the low 70s becomes relevant once again. And looking back more closely, there's a third ascending triangle right on top of the second one, demonstrating just how stable these steep portions of the uptrend were. The next example begins with a double top, which marks a clear resistance range, now reversing rolls to offer support. A fairly horizontal range is developing, especially at the upper boundary near 30, but there likely won't be a triple top pattern since there's a gradual yet noticeable incline now with the upswing point, slowly rising off the old double top range from 28 to 29. Leading to an ascending triangle that's likely to conclude soon. Watch it closely and the result is a clear drop below the triangle's uptrend lines to demonstrate a case of a failed ascending triangle, which in this case doesn't lead to a complete uptrend reversal, as the support range from the old double top and the lowest point of the ascending triangle now provides firm support. Then when returning back to the 30 boundary, there is also some resistance when recontacting the trend line as well as the horizontal range, which is gradually being surpassed. It's not a strong break as the chart quickly falls back onto these boundaries, where support is turning out to be under significant pressure as the trend line and this range begin to see the appearance of consecutive 3 methods falling candle patterns that return attention back to the old 28 to 29 range to finish off a good demonstration where an ascending triangle does fail and leads to a bullish to neutral situation rather than an immediate switch to a downtrend falling out of the ascending triangle's boundaries, which still hold to form somewhat of a horizontal trading range. To the next example, starting with a moderate to deep retracement, rebounding with a double bottom, then going fairly flat and range bound. That has recently seen an upward slope emerge to put steady upward pressure on that clear resistance range, which leads to the characteristic break of an ascending triangle. Quite quickly, there is a strong downswing, which in this case does see the trend line and the support range hold. A few highly bullish candles also make a big difference to transition the range centering around 170 from firm resistance to key support to accelerate this uptrend much higher. So there you have it, the ascending triangle, quite clear and straightforward. Stay tuned for examples of more chart patterns, along with other technical analysis techniques such as indicators and Fibonacci tools.